take the rapid fire as well.
Thanks a lot, Hiral, for that. We're joined in by Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you. We'll start our rapid fire round, but it's the day of banks. One side we have HDFC Bank, other side we have ICICI Bank. Let's start with HDFC Bank. A big drag coming in both Nifty Bank and Nifty. Do you think the selling will continue going ahead? Some more downgrades coming in, or the selling seems to be over for HDFC Bank?
Very good afternoon, Sharad and Hiral. Well, today we have seen a breakdown in HDFC Bank. Counter has broken below its 21 as well as 100-day moving average. So looks like there could be possibility of another leg on the lower side, maybe towards 760, 750 going forward. So avoid taking any contraband. I think there could be possibility of a follow-up move going forward.
Right. So any stop losses which we can see for HDFC Bank? Any short strategies?
Right, so as long as it trades below 800, there are high possibility of a move towards 750. So technically, your stop loss should be at 800. Just in case if you see counter going forward reclaims 800 level, then there could be possibility of a short coming move. But as of now, that should be a stop loss, and a sell on rise kind of a strategy can be deployed.
Right, sell on rise for HDFC Bank. But what about ICICI Bank? It's a different story altogether. Do you think that the charts have strength, or it's a consolidation play?
Well, Sharad, there is a strength because the counter has given a good breakout. So it is exactly opposite to HDFC Bank. Buy and decline setup I can see on the chart. Keeping a stop loss below 1390, if you get any dip towards 1430, 1420, that can be used as a buying opportunity. And there is still possibility of a move towards 1500 in the near term. Not an immediate basis, but yes, a gradual up move is something that we can expect.
Right, and the next stock is Vatek Babag. Order flows have started coming in, but does the chart give any better risk reward here, or should one avoid this?
Well, after today's spurt, better wait for a dip towards 2050. That's a good entry point. Keeping a stop loss below 1980, it can be bought on declines. The counter still has a strength and can move towards 2120 to 2150 in the near term.
Right, foreign brokerages are turning bullish for Sansera Engineering. Right time to make a positional bet in this counter?
Well, Centrum has already spiked around 5% today, but it is in a secular uptrend, can be added in a staggered manner. I think the counter has the potential to move towards 3600 to 3800 in the near term. So keep a stop loss at 3200. Buy and decline should be the strategy.
Nilesh, let's do a chart check for Havells and let's understand any important key levels and any trade can be made here.
The only positive I can see on the chart is that the counter has formed a very good base formation. So from a risk and reward perspective, it has a very strong support at 1120. So 1120 should be the stop loss. We can expect a pullback towards 1250 to 1300 going forward.
Right, Arcade. The next stock is the landmark cars. That's what we are looking at. And see, the long-term charts, there was a big correction coming in, but now the mutual fund addition has started coming in, value buying coming in. Just wanted to understand overall, is there a momentum at play here? Any more follow-up or volume-based buying is happening in this counter, landmark cars?
Well, the momentum is missing as of now, but yes, can be added on decline because the stock is trading well above its 200-day long-term moving average. So stop loss should be at 462. And can be added if at all it falls in the range of 500 to 505. We can expect a gradual uptick maybe towards 580 to 600 in the near term.
Right, stay with us, Nilesh, and now we are talking about an interesting theme, ALMM2 extension. Now it's of course positive for some categories of stocks and it's negative for some categories of stocks. So which are they? Varsha is here to decode that.
Well, first of all, the news is that the ALMM extension has been done till December 2026 from May 2026. Now, what is ALMM? It's nothing but that this requires solar projects. ALMM requires solar projects to use approved Indian-made solar cells. So earlier, by May 31st, 2026, all the producers solar projects were supposed to use Indian-made solar cells. Now that extension has been till December 2026. Now, why government is doing this? Because the domestic solar cell supply is insufficient, and this will also help project delays and cost escalation. Now, coming to the impact on which all companies will and positively impacted. All the modules and cell players will actually be negatively impacted. You have kind of Worry Energies, Premier Energies. If you see, there will be a near-term negative impact. This will delay benefit from mandatory domestic cell sourcing and also will reduce pricing power for some of the integrated players. Now, who will benefit from this extension? Of course, you have developers like CleanMax, which will actually benefit. Why? Because of the low project cost for open access projects. So hence, Worry Energies Premiers will have a near-term negative impact, while CleanMax and developers will have a positive impact.
Thanks a lot, Varsha, for clearing that out. But over to you, Hiral. What are you gathering on the markets?
You know, it's interesting. Before we go to market, Shyam Metallics, let's just pull up that one on the screens right now. They've just reported their numbers, and that's the reason why you're seeing that spike coming in there. 5.5% to 6% upside on a Shyam Metallics. If you look at the numbers, the revenues have seen a growth of almost around 30 to 33% as we speak. And that's the reason why you're seeing that growth. Margins have also come in at almost nearly 14% versus a 13.1% that we were tracking in the previous quarter as we speak. In terms of the calculated EBITDA, 5.3% at 765 odd crores on a sequential basis. In fact, if you have to talk about the EBITDA margins as well, the calculated one is 14% versus a 13.9% on a sequential basis. And they've approved raising almost 4,500 odd crores via QIP and others. So a very strong set of numbers that has been reported by Shyam Metallics, and that's the reason why you're seeing this kind of a rise coming in terms of the stock price. Let's just once again pull up the intraday chart of Shyam Metallics to see the kind of uptick that's coming in there. 8.5% up move on a sequential basis, a 33% up move on a year-on-year basis is what you're seeing in terms of the top line as well. And and the net profit is up almost 8%. Top line is up around 4% on a sequential basis. So strong set of numbers coming in there. Nilesh, on the charts, a 5.5% up move on a Shyam Metallics. Would you advise investors to book profits with this kind of a surge, or are you seeing further momentum from here on where investors can enter?
Well, in terms of a fresh entry, I think one should wait for a dip towards 1,040, 1,050. But if somebody is already holding the long position, can ride this rally up to 1,100 to 1,130 on the upside by keeping a trailing stop loss at 1,055. So the structure is still looking strong, and there could be a momentum play. Maybe 1,130, 1,150 can be seen in the short run. So keep a trailing stop loss in order to play this particular momentum.
That's with regards to Shyam Metallics. But thank you, Nilesh, so much for joining in. Always a pleasure to speak to you and get your views as well. Now, moving on.